Hey traders, Raghee here, and today's video could really be called a PSA, a public service announcement. And the reason I say that is I see a lot of traders make this low probability trade by ignoring the high probability, and that is when we get a gap. And now, most people will look at gaps as the difference between the 4 p.m. cash close and the 9:30 a.m. cash open. And that's incomplete, but not incorrect, right? That's the first step. The second step is to ask, did the market trade above the high? Did the market open above the high of the previous session? So that gives us two criteria. And what are the two criteria? One, did we open above the previous session's close, right? The previous close. And did we open, this is the 9:30 open, above the previous session regular trading hour high. So this would be for a gap up. Today we had gap up psychology. Now, nothing works all the time. We know this. We're playing probabilities, gang. That's what we're doing here. We're not playing certainties. That would be really nice. We're playing probabilities. So it's kind of the old saying, we don't go fishing, we don't go catching, we go fishing. Right? We try to put our lure, we try to put our boat, we try to put our line in a high probability spot to catch fish, right? It's not called catching. So both those criteria were met. Now, the low probability trade is to expect a gap up above those two levels to keep moving higher, which means your low probability trade is to get long, say, for example, the S&P. This is the chart that we have up right now. The low probability setup is to get long on the open. And that's still what I see far too many traders look for. Now, that's not the wrong idea. I'm still looking long too, but I'm looking long after the gap psychology is allowed to basically sort of play out. Now, what's great about gap psychology, if you are a trader who wants to get long, is let this weakness be how you set up the calls that you want to buy, the long positions in the futures that you want to take. Now, when something like this is happening, I do want to mention, not only am I looking at, for example, the ES, but I'm looking at the SPY. I'm looking at the XLK. I'm going to also take a look at the XLY. I'm going to look at a lot of these sector ETFs that behave a lot like the index ETFs, because what are they all similar? They're all collections of stocks, and I'm still looking for my favorite thing in the world, relative outperformance, relative performance, relative outperformance. And that means that is there something that looks better, but is related to a broader story? So as this market's selling off, fantastic. I may fade the gap. Today I did. And then I want to do what? Well, and I want to start, let's go to the Dow for a moment. Then I want to start scanning those heavily weighted sectors within the Dow and start scanning for that relative outperformance. So here's my public service announcement. And I know it's a little tongue in cheek, but I mean this sincerely. Look at where you are in terms of gap psychology. Is it in play? Then play the probabilities. And the probability is a short fade. I don't want you fading right on the open, but I want you looking for the ranges that develop. And then if we break support, then you can look for that short. Let that short set up your long, and that's exactly what we did today. So thanks as always for watching, for listening. Leave your comments below, and I'll see you in the next update.